Do not miss out the biggest opportunity at the moment to start your investment portfolio. Well, if you have an investment portfolio already, it's time to increase your position size as you won't get any better prices than this in the future. Historically, every bear market comes with a very long bull market. A bull market lasts an average around 14 years, and it could really change your life if you start investing now. If you're starting off your investment portfolio, you probably have questions such as what do I invest in, how do I invest, or how do I even manage my investment portfolio. We'll go through some strategies that you can put in place that can grow your investment portfolio over time. And I'll go through some assets that you can invest in, whether you're a risk-averse person or a more conservative person when coming to investment. Well, first of all, why now? Many of you know that we're in a bear market right now, and also you have seen the stock market and even cryptos drop by 40 and 50%. Well, this scares a lot of investors off, but I can tell you one reason why you should not be afraid. The basic rule of investing is basically buy low and sell high. So as humans, it's naturally for us to see a red market and stay away from it because we're afraid of losing money. That basically goes against the first principle of investing. Prices has dropped by 40 and 50%. Wouldn't that mean that it's the best time for us to get in now at a lower price? Because during a bull market, when prices start to increase again, you might regret it later on that you did not start early. The weird thing is during a bull market, people feel more inclined to buy these assets at a higher price than it was during a bear market because they see it going up, therefore you think that you can earn money. But if you went against this emotion that us humans have, we can start investing at an earlier stage during the bear market and make our average price entry for our investment portfolio lower. Now, going on to the question that most of us have, what do I invest in? This is truly the golden question in investment, and I would say there's only one answer to this: it depends. The reason why is many of us have different risk approaches when it comes to investing. Some of us like to take more risk towards our investments, and some of us just rather be more passive with our investments. A passive and conservative approach to investing will be buying index funds or even ETFs. Index funds and ETFs consist of like a group of companies that's grouped together by a fund where the fund's price tracked all the performance of these companies. An example of this would be the S&P 500, which they have an average return of 11.88% over the past 10 years. That sounds really good because basically your investments are earning an interest over time of 11.88% on average for the past 10 years. The more risk-averse approach will be cryptocurrencies. Cryptocurrencies are actually risky because they're quite new and they're quite volatile, as you can see probably a 10 to 20% increase in a single day. That could also happen vice versa, where they could also decrease by 10 to 20%. Well, those are the two assets that you can enter into if you're looking to start your investment portfolio. It all depends on your risk, and there's no one answer to even start investing on what asset. Personally, I feel that whenever we're just starting off investing, we look at a lot of videos and look at all these influencers telling us, hey, we should start investing in this and that, and also what are the best things to invest in. Naturally, as humans, we only like to consume and we never take action. So I would suggest that after this video, you go and create an account and just put in your first $100 or even $10 to start investing. Investing at this period of stage is not as hard as it seems as compared to the past, where you had to go to a brokerage yourself and fill out papers to even buy a single stock. But nowadays, you have a lot of apps that can help you to buy these assets, and it actually gives you no excuse to start today. An investing strategy that I would recommend to anyone starting off right now is a term called DCA, which stands for dollar cost averaging. Let me give you an example of how this works. So basically, as you know, investors can't time the market. We do not know when prices are going to drop or when prices are going to increase. It's impossible for us to even predict the market because we don't know what's going on, what news are coming out, or what government policies are coming out in play that can affect the whole asset market. So dollar cost averaging is a very good way to start investing. Even Warren Buffett has praised that this strategy is also really effective for newer investors. Dollar cost averaging helps you not put all your eggs in one basket at one go, but rather spread it out over a period of time. Let's say if you have $1,000 to invest in right now, and then you do not know when the price of that asset is going to drop or increase. Instead of investing $1,000 all in right now, invest $100 10 times. What this means that you can invest $100 today, maybe $100 next week, and $100 a week after that, and so on. If the asset goes the other way, if you invested $1,000, you'll be suffering that whole loss. However, if you had invested over a period of time, your entry price for that asset will be averaged out and you have lost less. An example of this strategy working is that I started investing in Ethereum for $100 each week since May, so it's been 6 months now, and my total investment accumulated up to $2,600 USD. But at this current moment, my portfolio stands around $2,655 US, and I did make a $55 profit on this. However, if I did put $2,600 in May, I would have probably lost around 30 to 40% of my wealth if I put it all in that one period of time. Spreading your investment over a period of time lowers your investment entry price and therefore reduces your risk to very high losses. If you worry about investing because you don't know what price to enter into, you don't know when to invest or even what to invest in, find companies such as Google, Amazon, or even Apple, or cryptos such as Bitcoin and Ethereum, the big players on the market, and start dollar costing average into it because you can never time the market. Personally, I would invest around 50% into stocks and 50% into crypto. I also do suggest to people do not put everything into your investment portfolio. You do need some savings aside, like I said, because you need to save for rainy days. You never know what's going to happen, and you need some liquid cash just in case anything goes wrong. Personally, if you're younger and you want to take more risk and basically have not much to lose, I would suggest you to put a bit more into crypto than stocks because crypto during the next bull market could probably double or triple or even 10 times your money. But of course, go in carefully and do your research first, dollar cost averaging in, reduce your average entry price, and that will help you in a very long run. If you're watching this video and you haven't had an investment portfolio, I would suggest you go take that application right now, sign up for it, verify yourself, and put the first $100 into that. Start a recurring buy every week. Try to put aside some of that boba money. Just don't spend like $10 on your boba. Just put it into an investment account and see that money grow over time. That's my thoughts on the investment portfolio. As usual, always DCA in, reduce your average portfolio size because you can never time the market, and start your investment portfolio journey today. That's all the thoughts I have for today. Don't forget to like and subscribe.